there, and welcome to your 2-Minute Money Manager. I'm your host, Stacey Johnson, and this answer is brought to you by MoneyTalksNews.com, serving up the best in personal finance news and advice since 1991. Today's question comes to us from Allison. Allison says, we're thinking about taking out a home equity loan to pay off some high-interest debt and fix up some things around the house. Should we get a regular home equity loan or home equity line of credit? What's the difference between these things? Okay, Allison, let's discuss. Borrowing against your home, you've got both home equity loans and lines of credit. Either one allows you to borrow at relatively low, potentially deductible rates by using your home as collateral. There are, however, important differences between the two kinds. A home equity loan is a second mortgage. As with your first mortgage, you borrow a lump sum, you got fixed monthly payments, you got a fixed interest rate, and you've got an ending date when the loan's over. That's when you're going to make your last payment, right? Home equity line of credit, on the other hand, is more like a credit card. You're going to get approved for a maximum credit line, which you'll tap whenever you feel like it. The payments are going to vary based on what you borrow, of course. And like a credit card, the interest rate can fluctuate over time. Also, like a credit card, you can run up a balance, pay it off, start over. You see what I mean? There's no ending date, in other words. So which of these loans is best? Well, it depends on the reasons you're borrowing. If you need a lump sum, say for a room addition or to pay off a specific debt, the loan's probably best. If you're going to need varying amounts at varying times, say for a kid heading off to college or for your small business, a line of credit may better fit the bill. As with other loans, your ability to borrow, along with the terms you're offered, are going to depend on your credit history and your credit score. Now, that's the good stuff. How about some potential problems with these loans? Both home equity loans and lines of credit can help you find financing at favorable rates, but they also carry a significant risk. Because they're backed by your home, failing to meet your obligations could literally mean losing the roof over your head. So approach these loans with extra care. If you're tapping your home equity to meet a one-time expense and can easily afford the payments, awesome, go for it. But if you're borrowing because you're living beyond your means, you're better off borrowing via a method that doesn't put your home at risk, like a credit card. So there's a common expression used in the credit counseling industry that describes these kinds of loans. Buy a blouse, lose a house. I want you to keep that in mind as you consider these kinds of loans. Well, Allison, there you go. Now you know the difference between home equity loans and lines of credit, and you know you need to be careful. Only thing left, where to find loans like this. We've got a comparison tool at MoneyTalksNews.com that will show you rates from lots of different lenders nationwide. Just go to MoneyTalksNews.com and click on our Solutions Center. Okay, that's that. Now, what about you guys? Got a question of your own to ask? Then do what Allison did. Simply hit reply to any Money Talks email newsletter and fire away. I can't answer every question, but I do my best. And if you're not getting our newsletter, fix that right now by going to MoneyTalksNews.com and subscribing. It's free, takes 5 seconds, and will absolutely positively make you richer. I'm Stacey Johnson. I'm going to see you right here next time.